trading profit and loss account for the year ended 31st December 1998. And don't forget, you must put the heading. The name of the company is Badmus Limited. Badmus Limited Manufacturing Trading Profit and Loss Account for the year ended 31st December 1998. So then put it in the T format. Now, the first thing we have to prepare. So then the first thing in the format is the opening stock of raw materials. Opening stock of raw mat, and that is a 600 naira. Then after that you had purchases. It is given in the trial balance mat. We have a 51,000 naira. You add it together, you have 51,600. Then you less clothing stock of raw materials. I think that is given in the question. Clothing stock of raw materials, it is given national information, which is 8,400. Then when we add it together, we have a 43,200. So that is the cost of raw material consumed. This is cost of raw material consumed at the end of the day. Then do you have a royalty? We don't have royalty. Do you have a factory wages? We have a factory wages. So you have the factory wages because they are direct wages. You can easily trace them to the production of the unit of goods. So factory wages, you have a 46,000 naira 800. Do you have a excise duty? We don't have. Do you have franchise? We don't have. So we have, since we don't have it, we add it together. That is what will give us what? Prime cost. And you know, I told you before that the prime cost consists of indirect material, indirect wages, and indirect expenses. So this is that. Then we go to factory overhead. You know, I told you the other time that any information that relates to factory overhead is what will be put under factory overhead, like a machine repair. If you look at the question, you see machine repair. Machine repair, because machine is used in the factory, so it is an expense, is a cost. Then don't forget that we have motor expenses, one for motor factory and one for expenses. So one for motor factory will be put under the factory overhead. That is the motor running expenses. You know, we are told to allocate it equally. So the ones that belongs to factory overhead is 7.2. Then we have, don't forget, we have depreciation. And we're looking at the format to see that plant and machinery are the depreciation of plant and machinery belongs to factory overhead. So plant and machinery, we have 7,200. Do you have any other information under factory? We don't have. So we had this total together, we had 23,520. So then we now had prime cost and the factory overhead together. You have, so at the end of the day we have 103,520. Now, if you're looking at the question, Do we have a opening stock of work in progress and closing stock? We don't have in the question. So since we don't have it in the question, so this will be, we name this as a cost of production. So this is our cost of production at the end of the day. But in the case, there are some cases in the manufacturing account whereby you'll be given good manufacturing during the year have to be transferred to trading account at 14400. That's what we call transfer pricing. It will be given that the cost of production at the market price, at the market value, the cost of market value is another price. Yes, you might be given in the question, but it's not most on the rare case there, but on the rare cases, most of the time they give us. But in this question, we are given that information that good manufacturing, which is the cost of production, they said during the year, they are to be transferred to trading account. This is what they are trying to tell us here. What they are trying to tell us here is that this cost of production that it is the cost of production in the factory, that the cost at the market, not the selling price at the market, but the cost at the market is 114,000. That means this shows that we have a manufacturing profit. So we will have to prepare what we call manufacturing profit, because as a cost in the factory is this, but as a cost in the market, it is not. I'm not talking about the selling price, but I'm talking about cost as at market value. Cost market value of that cost of production in factory is 11400. So that means there is what we call manufacturing profit here. So we just write profit on goods manufacture. It is not most on the rare cases, they don't give you us most of them, but in the question we are given. So this is what will be our cost of production at the end of the day, not this one, because cost at the market is 14, not this. So we have a manufacturing profit of 4,800. So we just write transfer. Since this is the cost of production, you just write transfer to trading account is what? 114,000. So this is their new cost of production at the end of the day, not this, because we have been given in the additional information see that the cost at that price is this, not this. So we have a profit on good manufacturing at the end of the day. Now we are through with the manufacturing. So let's prepare what we call trading account. Under it we have sales. Sales, what is our sales? Our sales is 204,000. Then what we have is do we have opening stock of finished goods? Let's see if we have it in the question. Opening stock of finished goods. We don't have opening stock of finished goods. So what we just write is a good transfer or cost of production. You can call it new cost of production. So which is 114,000. You can call it, or you can call it good transfer or cost of production. So this that since we are not given no opening stock, and are we given purchase of finished goods? No, we are not given in the question, but we are given closing stock for finished goods. So we just say less closing stock of FG, which is a finished goods. That is 12,000 naira. So at the end of the day, we have 102,000. So we call that cost of good sold. You don't have the turning word here. You don't have any other information. You don't have carriage inward or finished goods carriage outward. So we left it so as for us to get our gross profit at the end of the day. So if we left this from this, we have 102,000 at the end of the day. So our gross profit is our gross profit at the end of the day is 102,000 naira. Now, here we go. Trading, we are through with manufacturing, we are through with the trading. Now let's go to profit and loss. So we brought our gross profit forward here. We have a gross profit brought forward. That is 102,000. And don't forget that we have profit on good manufacturing. It's also profit to the manufacturer. So it's also profit. So we just write profit on manufacture. So you also bring it down here. Profit of manufacture, which is 480. Then after that, let's prepare expenses, the items that is under expenses. Don't forget we have lighting and power. Lighting and power is under expenses, light and power. And don't forget that we adjust accruals on it in the additional information. So the total that we're going to pay and is you see this one is going, we add it, and that is what goes to profit and loss. So that is we have 7,000. And don't forget we have a motor. We have a motor expenses. Which one goes to factory and one will be going to expenses at the end of the day. So motor